Hey fam, welcome to our weekly market update. The markets have been closely watched in recent weeks as investors grapple with a range of factors, including fluctuating inflation and concerns of ongoing discussions around monetary policy. Today, I'll be giving you the latest update on developments in the American markets, examining key trends and insights that are shaping the economic landscape. So, let's dive in. In his semi-annual testimony to the Senate Banking Committee, Federal Reserve Chair Jerome Powell said inflation risks still tilt to the upside. The labor market remains extremely tight, and policymakers are prepared to increase the pace of rate hikes if warranted. His remarks were somewhat more hawkish than we anticipated. The market reactions included a yield spike at the front end of the bond market, with the 10-year yields rising above 4% levels and the S&P 500 index dropping 1.5%. However, as the week proceeded, the global stocks edged higher. U.S. futures and stock were traded mixed, and Treasury 10-year held below the key 4% mark. Let's see what else is under the surface, shall we? All right, a stronger than expected February private payrolls report released this week suggested that the economy is standing strong despite the Fed hikes campaign. As per ADP Research Institute, U.S. companies added more jobs than expected in February, underscoring persistent demand for labor that's keeping wage growth elevated. Private payrolls rose 242,000 last month after a 119,000 increase in January. Meanwhile, as per JOLTS data, the number of available positions decreased to 10.8 million in January from 11.2 million a month earlier. Positions dropped, but still remained significantly high to consider by the Fed. The applications for U.S. unemployment benefits last week rose to the highest since December. The data showed weekly jobless claims rose to 211,000 during the week ending March 4th versus expectations for 195,000, and the first time claims surpassed 200,000 since early January. The numbers followed Wednesday's job openings print, which came in on the hot side. Mortgage applications activity increased for the first time in 3 weeks during the period ending March 3rd, despite the slight increase in the rate. The market composite index increased 7.4% on a seasonally adjusted basis compared to the previous week. The refinance index rose 9% from the previous week and was 76% lower than the same week in 2022. The purchase index was 7% higher than the prior week. The U.S. may consider lifting COVID-19 testing requirements for travelers from China as soon as this week, a significant step toward normalizing links between the two countries as the pandemic recedes. The Biden administration ordered this rule in January. China's exports and imports continue to decline in the first 2 months of the year, clouding the outlook for the economy as it gradually began recovering from COVID restrictions and infection waves. Exports fell 6.8% year over year in January and February. Imports contracted 10.2% in the first 2 months of 2023 from a year earlier. The trade surplus for the 2 months of this year was $117 billion. President Biden is proposing a series of new tax increases on billionaires, rich investors, and corporations in his latest proposal for how Congress should prioritize taxes and spending. Fed Chair Jerome Powell told Congress this week the Fed is ready to pick up the pace of rate hikes if the totality of the data warrants it. Without waiting for that totality, markets have fully priced in a 50 basis point hike at the March 21-22 FOMC meeting. However, few investors feel that a 50 basis point hike is not a done deal. Indeed, Powell stressed on the second day of his congressional testimony that no decision has been made yet. What do you think? Let me know in the comments section. Well, that's it for this week, everybody. Stay updated with our news, and our trading desk will keep you informed with our pricing incentives. Have an awesome Friday, everyone, and an even better weekend. Buffy, out.